How to create infinite possible returns with minimal risk. This is a TheoTrade presentation. My name is Don Kaufman. I'm going to take you through, again, quite a bit this evening, so stay tuned as we get into it. Risk disclosure. We're not financial advisors, nor a broker-dealer. Hey, listen, I spent 15 years in the brokerage world, so I like to throw up a little bit of a risk disclosure. Next, copyright disclaimer. This is ours. This is not yours. And the other aspect I like to bring up to your attention is right here. If you need to get a hold of me after this evening, just hit me up. Support@TheoTrade.com. We actually use a common inbox. We answer emails. We answer all kinds of emails. We use a common inbox, so you can shoot an email at any point to support@TheoTrade.com, and you can just put into the title, Dawn. It'll get to me. It'll get to me. All right. We're located right here in Scottsdale, Arizona. With that, let's jump right into tonight's presentation. All right. So this is why you're here this evening. First and foremost, by the end of the webcast, I want you guys to be able to walk away with some really definitive knowledge. First, we got to learn where edge lies in markets today, and more importantly, the strategy that turns edge into those potential profits. Number two, find one core strategy with potential for mass returns with minimal risk. Okay, that is actually the emphasis for this evening. Okay, this evening is about, again, potential for mass returns, minimal risk. I'll explain a bit more about that here in the coming minutes. Number three, discover how you can reduce risk of a portfolio regardless if you're long or short. So we're going to introduce you to a strategy that can make very, very large returns. And those returns can actually be used, okay, to reduce risk of an existing portfolio. However, it doesn't necessarily have to be used against an existing portfolio. If you're looking at this marketplace and thinking, this is crazy, okay, that's not a rhetorical question, by the way. You can feel free to chime in here at any point. You can look at this marketplace right now. You can think, this is crazy. This is insane. How can it keep going? Well, we're going to show you a strategy specifically designed for this type of a marketplace. We'll jump to number four. Determine one strategy can help you in creating high return, okay, to risk ratio, even in the most extreme of bullish or bearish markets. And I would have to denote that we are right about there. We are in the extreme. And number five, what are the right steps to take, okay, whether you're trading or investing? So we're actually going to reference a couple of different times throughout the course of this evening. You can be a trader, you can be an investor. The strategy that I'm going to detail this evening, okay, kind of plays both sides of that, where if you're an investor, you've got to tune in to what I'm about to talk about. If you're a trader, absolutely unequivocally, okay, it'll help you reduce risk. It'll also help you, okay, in hitting home runs and the possibility of home runs inside of your account. All right, for those of you, okay, you're tuned in, our gift to you. Stay with me until the end of the webcast this evening, okay? For doing so, we are going to provide you an indicator. It's an SPX expected move indicator. It's an indicator that I have spent countless hours, okay, putting together. It is 3 full years now of weekly expected moves in the SPX. And the SPX, some people don't really know the SPX. That drives the entire marketplace, okay? It literally drives the marketplace, the SPX. All of these are my hand-calculated expected moves. It's an indicator that literally changes the way that you're going to view the markets. It's a $197 value. I will present precisely where that indicator is found. I will actually give you a link to the indicator. Stay with me right until the end of this webcast this evening, and I will provide that for you. What the indicator is, well, here's some specifics. And again, this is just about 6 months of expected moves, weekly expected move. They're ranges in the SPX, and they're derived from the options chain. These highlighted candles, and you'll see very few of these, okay? Those highlighted candles there, okay, there. Those are breaches of the expected move, okay, at week's end. What the study does, it defines efficiency or lack thereof in the markets. And it tells you, okay, as a trader, do I want to be buying options? Do I want to be selling options? Now, not everybody that's tuned in tonight even knows what an option happens to be. This expected move indicator can be used in numerous ways. You can look at this thing and think like, oh, it's hitting the upper edge of the expected move. Okay, that is a high probability of pulling back to that edge. And you can see this time, okay, and time again. Again, I think that this indicator is something that every one of you should have, and that's why we're providing it this evening, okay, is our gift to you for staying tuned to the end of the webcast. Couple of housekeeping items. Housekeeping! This is skill set. You got to pay attention during the following course material. Shut the door, turn off Skype, chat, whatever else distracting you. Close your Facebook, silence the phones, kick the kids out. You don't need them in there. Kick out the grandkids for sure. That's the best part of having grandkids, right? You can hand them back. However, the dog can stay. Listen, when it comes to doing something like this, you got to commit to an hour and a half of time. You took time to be here. Okay? If you want to learn this, it's important. Focus on being here. And it's, again, very, very important to me that you guys, again, really retain some of the material that I'm going to be discussing this evening. So here's a little bit about me and kind of my background in this business. So I watched order flow for 15 years. That's a very large portion of why I am here. So I grew up around traders and trading. I had family that started trading in the 1970s in Chicago, and my uncle specifically started a trading firm. That trading firm was founded mid-70s. He built it to over 500 seats in exchanges all over the world. Anyway, I got out of college, the late 90s, and one of my cousins was trading, and he said, hey, you want to come clerk for me for a summer? Absolutely. So at 22 years old, a ripe old age of 22, I headed down to the Chicago Board Options Exchange. Yada, yada, yada. I loved it. You can't put a 22-year-old kid in that environment without him loving it. So I worked there for a few years. They moved me upstairs very quickly as a risk manager. I then went to work for a startup firm called Thinkorswim. I did that in 2001. I was there when we took Thinkorswim public in 2007. All the way through 2015, when 2009 TD Ameritrade came in and bought us. The deal went out at about $600 million. It was a good start. It's a good start for me. In that time, though, I actually built and ran education for both firms, both Thinkorswim and TD Ameritrade. But much more importantly, I had access to the largest retail order flow in the entire industry. And a lot of people don't necessarily know the term order flow. What it basically means is this. I could see everything that you could do. All right. I saw everything, every trade that everybody ever did. Okay. I had access to over 7 million accounts. We studied trades. We dissected everything, big data. It was huge. Okay. The learning curve was phenomenal for us. What you learn here tonight comes from watching literally billions of dollars in others' mistakes. And part of this is also, the knowledge of what works best for retail traders. And a lot of that knowledge comes from, of course, having studied over 7 million accounts. Not to mention, I also have a 20-year, very active trading career. I still do TV spots from time to time. For those of you, if you ever tune in, this is actually the TD Ameritrade Network. This is one that I did back in their studio. August, September, I was actually in the Chicago area, hopped into the studio over there. This is actually CNBC, one of the more memorable, moments, I think, on CNBC. It's Don versus the King Shark. With that, by the way, I was the short and apple, he was the long. It actually worked quite well for me. All right, let's jump right into this. The following presentation, this can be a little bit demanding to learn, right? I'm going to tell you right off the bat, there's more effort needed, okay? Everybody that tunes into a presentation lately, like, is this going to be red and green flashing arrows? Is there a bouncing ball? that tells me when to buy and sell. That's what people literally expect. Okay, I'm going to tell you right now, you want to learn this business. This is like getting into any other business. You want to learn this business, you're going to have to actually learn something. Okay, you have to be willing to put forth some effort. Is that okay that I'm at least telling you that right up front? Because am I trying to challenge people? No, I'm telling you, you're going to have to put forth some effort. Trading is not instant coffee. It's not instant tea. It's a skill set. Some of you have some experience, and I totally appreciate that. But there are certain aspects of this business that you're going to have to unlearn. I would actually prefer that some of you are a clean slate. At least that way you haven't been damaged goods as of yet. But the bottom line is you have to be willing to learn. And I'm going to actually teach you a strategy tonight that's, takes a little bit of effort. You're going to have to wrap your head around this one. For those of you, if you're brand new, please, if you're brand new, let me know, okay? And the second thing, if you're brand new, just try to grasp big concepts, right? Big chunks of logic. With that, let's get started. Low risk market. No, I asked that as a question. Would you consider, this a low risk market? I call this volatility limbo, vol limbo. How low can volatility go? So the Fed has got your back. Yeah, there he is. Okay, the man himself. In recent months, all right, we have seen the risk in markets almost completely abate. Happened a lot, of course, in 2019. Because once again, all right, in early 2019, the Fed said, I got your back. Central bankers are supporting markets, okay? And all shall be well. Let us not think about the Fed having to step into the repo markets in order to literally save the financial system. It's kind of ironic because on one hand, we have, don't worry, the Fed's there. On the other hand, the Fed literally had to step up starting in September to say, save the repo markets, save the repo markets. And I don't know how much any of you, may know, but at the very end of the year, the repo markets, they were having to pump in record amounts of capital every single day to literally save the financial system. What's a record amount? Now, let me show you definitively here. I wanted to throw a couple of headlines up here just to kick off the evening. And this is not to be bullish or bearish, okay? This is Wall Street Journal, and it's, hey, take a look at the date, all right? It's January 14th. It's today. The Fed adds $82 billion to the financial markets. Banks demand for longer-term liquidity increases in latest repo operation. Okay, that makes me feel really good. Wait, I got another one. This is just before Christmas. The Fed's repo problems are only beginning, as the biggest bubble in history looks ready to pop. All right, Fed repo problems shed light, on where the real dollar liquidity crisis is brewing. Europe, Deutsche Bank is at the center of the storm. So, I don't know, a couple of headlines over there, but the Fed has your back. By the way, I wanted to throw a couple more in here for some fun. The Fed's payments to the Treasury hit a decade low in 2019 as the repo crisis raged. Oh yeah, that was 2 days ago. And forget the election. Stocks face this crucial test right now. And that was, of course, today. An article published literally today at noon. I just wanted to give you some very recent, very pertinent data. Save me, central banks. Please, don't worry about Brexit. Don't worry about slowing global growth rates. Now, if you're, by the way, if you're not privy to the understanding of slowing global growth rates, China last night announced their exports are absolutely rock bottom. The 2020 elections, of course, coming. Trade wars, by the way, the trade war, that whole debate's not over at all. We actually just sparked another trade war with Europe literally today. There's a possibility of yield curve inversion, debt bubbles, corporate debt, stock buybacks, and more. The only reason I am bringing this to your attention right now, and by the way, I love this little picture over here. That's that's the Fed basically loaning the entire, financial system a little bit of money, apparently $82 billion today. The reason I'm bringing this up, is I asked the question, is volatility really in decline? Because what you have to start to fathom is all these risks, and the VIX is in decline. Now, not everybody even knows what the VIX is. Okay, a myriad of risk with the volatility index in decline. This is a screenshot that I actually took today. And in this particular screenshot, this is a 3-year weekly, right? And effectively, what you're seeing is a fairly consistent decline in volatility. There's a few spikes every now and again, but you got to really go back until like Christmas time of 2018 to see a real serious volatility spike. Nevertheless, okay, the myriad of risks and volatility is in decline. By the way, I love this. People are chatting in right now. They're like, what about student debt and this and that? You're exactly right. I was just getting started. Okay. What I wanted to show you there is this amazing divergence, and the divergence in this, this bifurcation. Volatility is in decline with this huge number of risks. Now, I don't proposition this, not a bear. Okay. I'm not propositioning this as a bear. I'm not attempting to position markets are bearish. I'm not even trying to create a bearish case. I'm simply asserting, okay, that markets appear to be continually undervaluing and underappreciating future risks on both bullish and bearish sides of the marketplace. Okay, and I cannot stress that enough. They're underappreciating bullish and bearish sides of the marketplace. Allow me to dictate that. This is the spiders. If you're unfamiliar with the spiders, it's the S&P 500. That's it. It's just the S&P 500. You don't have to overthink this one. Like the spiders, okay, is an ETF. Specifically, this one relates to the S&P 500, right? And what I did is I just pulled up exactly, okay, a 1-year chart. I can't use year to date because we're only a couple of days into the year, but I pulled up a 1-year chart. And on this 1-year chart, okay, the spiders are up 27.55%. But I want you to see something that's really interesting in here. And this one, again, I cannot stress enough, right? Right here. Actual market moves are outpacing implied volatility on both bullish and bearish moves. What that means, okay, is that this market is moving way more than it's supposed to. And who determines what it's supposed to? That's implied volatility. Implied volatility is another word, okay, for options. The options market right now is doing a horrific job of pricing risk. The SPY is up 27.55% over the last year, okay, with the VIX 100-day average under 15%. Do you not see the discrepancy there? And in that, okay, lies trades, right? So VIX, the VIX isn't just some random number. The VIX is 15%. What a 15% VIX means? It means that this S&P, okay, over the last year is supposed to move at a rate of about 15%. Did it move 15%? No. What did it move? Over the last year, 27%. Okay? So the marketplace is literally outpacing the moves that are implied. Now, with that, okay, how are we going to take advantage of this? Well, that's exactly what we're going to get to, right? That's what we're getting to. But before we do, we got to talk a little bit about volatility. We got to talk a little bit about risk. Volatility is equivalent to risk. People call volatility all kinds of things. They're like, what is volatility? They go, it's movement. Nah, it's risk. Okay? The options marketplace. And again, I've said it now 3 times. I said the O word, right? What's O? What's the O word? Options. Options market. You may have absolutely no experience. You will by the end of tonight. Is it okay that we talk a little bit about options? Because I'm telling you right now that without that options market, okay, you're missing a huge piece of the puzzle. I'm not here to get everybody tuned in and turned on to trading options. I'm here, okay, to show you where huge opportunities lie, and they're being missed, okay? The professionals are all over this, and they're being missed by retail clientele time and again. Option markets can be thought of as putting a price tag on risk, okay? Pricing in markets is determined via market participants. Ultimately, options pricing comes down to supply and demand. Higher risk, higher options pricing. Lower risk, lower option pricing. Let me just show you, okay, a really, really brief example in this case, and then we'll move forward. All right? You go out there and you look at an option, okay? And an option, right? And we'll say this is a call, okay, option. A call option is trading for $3. It's trading for $3, and that option is good for exactly 1 month of time. I mean, what are you really buying? You're buying an opportunity. You're buying a wing and a prayer. But when you look at the price of the option, that option is a $3 option. You say, who prices that thing? Who prices it? In the end, market participants. In the end, option pricing isn't some crazy model. It's not some Black-Scholes model. And so, who cares about all the mathematics behind it? In the end, it all comes down to supply and demand. And options trading for $3 because that's what somebody's willing to buy it for, and that's what somebody's willing to sell it for. So when you're making a market, all right, and that market comes out to $3, rest assured there are literally billions of dollars, okay, both buyers and sellers coming together, billions of dollars to draw that marketplace right into that $3 like price. Well, that's something I want you guys to understand, because right now, what's volatility? What's risk been lately in the markets? It's been low. It's been incredibly low. And it's actually, the volatility is so low that it's actually providing edge. It's providing huge potential if you know the right option strategy to deploy. Now, the options conundrum. Option markets over the past few years have done a really poor job of handicapping, which is pricing, risk in the future. Okay? To be really specific, option volatility has been incredibly low. It's exactly what we're just talking about. And yet, we have sustained some of the single greatest moves ever recorded in the history of markets. Okay? If you want to gain an edge in the markets, here it is. That's a humongous edge that people, they just continually, they miss it. When I talk about, big moves in the marketplace, you guys tell me, these are not rhetorical questions. Name in just the last couple of years, throw out a date, I don't care. Where have we seen some big moves in the marketplace in recent years? Don't worry, the last 3 months have been kind of quiet, Don. Really? Because we've actually sustained one of the largest rallies ever in the history of markets. We're right up there right now with 1999 and 2000. Okay? Oh yeah, I'm going 20 plus years back. Okay? We're right up there with some of the greatest rallies of all time. I'm not just talking about down moves here. I want you to think about that for a second, because you think about how low risk has been, and you see these just wicked moves come literally out of nowhere, and that is a huge edge in markets. Now, what do we have to do? You got to do something about it. Okay? Positioning your portfolio for a big move. All right. You got to get, from that logic. That logic is what? We are seeing wild and woolly moves. I mean, that's kind of what I call them. I mean, there's been a whole lot of crazy in a marketplace that isn't pricing crazy in. And that's all well and good. But now you have to translate, okay, or what I say, let's get down and dirty. How do you position yourself most effectively for the possibility of an extreme move, right? Without exposing yourself, though, to drastic risks. That's the key. You have to take that knowledge of extreme movement, okay, in light of the fact there's low volatility. You have to take fact, okay, and take all of that, push it aside and say, how do I strategize around it? It doesn't matter that markets are going to move huge. Well, that's great. Okay, you don't know which way. Good. Okay, this is serious though. There's potentially billions up for grabs. You don't want to get cute. You want to be very straightforward. Okay, don't want to take drastic risks, but at the same time, you want to position yourself for extreme moves. Right? The future, it's bright. It's really bright right now, and it is full of risk. Okay? We're not suggesting, okay, that we can time any of these wild and woolly moves. Can't. Listen, I'm not going to sit here and tell you I have a crystal ball, because nobody does. It's ridiculous, right? I mean, come on. The Fed literally didn't see the repo crisis about to happen. Again, most people have no idea what a repo even is, but I'm going back to that just to prove a point. The Fed can't see their own hand in front of their face. They run the financial markets, and they didn't see the repo crisis coming in September. And it happened during the first day of their meeting. Do people not get that? And the people go, well, I have a timing solution. Okay. Or better yet, we just started off 2020. Everybody's got this is what's going to happen in 2020. Please. The Fed doesn't know what's going to happen in 2020. They flip, they flop, they've changed their minds so many times. Okay. I say, listen to the Fed. You know why I say listen to the Fed? Because they don't know what's going to happen. Again, I'm not suggesting we know what's going to happen either. You don't have to be able to time wild and woolly moves, because no one can see the future. We are, however, suggesting having placed the correct options-based strategies, it's going to make all the difference, right? Let's get right down to it. You could be 2 trades away from this. What is this? Well, this, okay, is your first introduction to what is called an infinity spread. And the infinity spread, okay, is a crisis-seeking spread placed inside of the options marketplace. Okay. The trades that you are seeing down below are live. They are executed trades. Now, okay, please, you're watching this evening, do not run out and be like, I got to jump into this thing. Okay. Okay. Anybody and everybody can do these particular trades. Okay. Whether you have no options experience, whether you have a ton of options experience, if you're in an IRA, okay, we can help you put trades on like this. First, though, I'm going to explain to you, okay, the risk graph and some of the overall logic of the particular strategy. Risk graph. All right. If you've never seen a risk graph before, okay, let me explain this. Let me explain you something. This is where we're currently at. Okay, that's where we are. What this effectively means is that if you were to put this strategy on, okay, over to the left-hand side, this is your P&L. Now, bear with me for a second. If you put this strategy on, whatever the strategy is, and right now, please don't worry about it. Don't even look at it. Okay, let me just get to the risk side of it first. If you put the strategy on, okay, and you were to take a loss on this strategy, what are you really looking at in terms of a loss here? Let's actually bring this up, okay? What are you looking at in terms of a loss? Look at that. That's negligible. There's not even a number for that. Was it 100, 150 bucks at most? Okay, it's not even that much. The point that I'm trying to make, the risk in this strategy, and I'm going to say this again and again and again, the risk in this strategy is absolutely minimal. Okay, there is minimal risk inside of the strategy. So I'll reiterate that time and again over here. Now, okay, I want to say this again. Right here is where the stock currently is. And this stock isn't a stock. It's an ETF. It's the S&P 500. So let's denote that up top over here, that you are looking right now, okay, at the S&P 500. So that's where the S&P 500 currently is. There is an upside potential to this strategy right here. There is a downside potential to the strategy right here. The graph, okay, quite ironically looks a lot like a hammock. Now, okay, what the strategy is designed to do, and I want to get into, the express design of the trade, okay? A couple of different things. First of all, it can be wildly profitable to the upside. It can be wildly profitable to the downside. Now, okay, what do you need this strategy for? Well, you can do a couple things with it. Number one, if you have no positions on right now, none whatsoever, if the market were to rally huge or sell off big, okay, you're going to make some serious money. Just to give you an idea, what's serious money? This is an extremely conservative risk graph. All right. A trade like this, just so we're all clear, that's only one contract. That's a 1 unit trade. One by 3 by 1. One little unit. 1 unit with about a 7% sell-off. okay, in the markets. And you're like, 7%'s a lot. Please, 7% happen overnight. 1 unit, okay, a little bit of a sell-off, and you've got profitability in excess of $1,000. That's on a one lot, okay? A big rally, market rallies, okay? For example, up here, what do you got? That's not even a huge rally. I mean, we're already trading like 330 in that neighborhood. A rally up to 340 would see about $500-$600 of profitability to the upside. Now, okay, you think that's going to take some time. Yeah, no kidding. Look at the time frame of the strategy. These are March and April options. Is April options? What is that? That's 94 days out into the future. Does that give you enough time? I think it's enough time. Okay, 94 days to laugh, to cry. Minimal upfront risk. One of these trades is actually even done for credit. Now, okay, this assumes, and again, I'm assuming you have nothing on. If the market completely tanks, it's going to be huge. By the way, you're going to make a lot more than what this risk graph shows because volatility is going to go up if the market tanks. Okay, this is a very realistic, okay, and very definitive picture of profitability. But what do you need? You need big moves. You need big moves. Do big moves happen often in the marketplace? Do big moves happen often in the marketplace? No. No. But how many big moves do you really need if you have a strategy that you go out and that strategy you pay something like $1.60 for, okay? And let's say even 1 in 4 times pays off. But when it pays off in excess of $1,000. Is it worthwhile? And I'm saying $1,000. That's one contract. That's the bare minimum. You can't do less than that. You put down $160 and the bare minimum is it'll pay out $1,000. Okay. It is a long shot trade, but the marketplace keeps throwing long shots at us. I mean, it's like picking this horse that you're like, that thing is just ugly. It's in the back of the pack. It's too small. It's too this, too that. That's the exact kind of market that we've been in. Okay. Have you not looked at the marketplace lately? Right here. And I don't mind reverting back to the marketplace for just a second. This is a live picture. Okay. It's a live picture of the marketplace. Look at the S&Ps. The S&Ps are a freight train right now to the upside. Okay. How does a strategy like this fare? If this call side of the sun, that's on for about 2 months. In 60 days, let me ask you something. In 60 days, can this marketplace move up another $10 or $15? Of course it can. Look what happened just over the last month, people. It's gone from 314 to 330. That's $15. Okay. That's less than 1 month of time. I'm literally taking one snapshot period of time. We traded from like 314 all the way up to almost 330 on the spiders. Okay, so a $15 move. I mean, $15 move at this point in time, it's north of like, the 340 mark. That's $500-$600 of profitability. That's assumption of an up move. What happens if there's a wild and woolly down move? You're there too. The infinity spread, okay, again, is playing on both sides of the marketplace, but it has extraordinarily low risk. Extraordinarily low risk. And it is, okay, a type, for those of you that speak geek, it's a type, okay, of ratio spread. It is a type of ratio spread and multiple spreads put together. This is something that I have actually been employing, okay, for many years. And there's great questions already coming in. By the way, yeah, we're going to show you here in a minute. Somebody said, can I do this instead of doing it on the spiders? Can I do it in a stock? Oh, yeah. Can I do it in bonds? Oh, yeah. I'm actually going to show you my trades. Listen, when I talk about recent years, okay, and I'll come back to that trade in a minute, but when I talk about recent years, there is one thing I'm going to tell you. First, just allow me to display a number of key events in the last few years. I'm taking a snapshot, okay? What I decided to do was to show you big event risk. Big event risk. And every major event in the last 5 years, we've been on it, okay? Markets and volatility did not effectively price risk well in the events I'm about to show you. Thereafter, okay, I shall display the primary strategy I used to create all of these opportunities. So I'm going to take you on a little kicker down memory lane over here. The last 5 years, where the marketplace did a very poor job of pricing risk. And I say, proof's in the pudding. I actually am going to show you my trades. First one I want to start with, and I said, you want to take a trip down memory lane. This is every major event in the last 5 years. And in every major event in the last 5 years, we've been on it. When I say we've been on it, first of all, here's volatility. It tripled in 3 days. What is this? It's the Chinese yuan devaluation of 2015. This was actually August of 2015. The volatility exploded. What I'm basically telling you in this particular circumstance is the marketplace, okay, it was blind. The marketplace was at a basically a 15 vol, and it spiked up to a 42 volatility literally overnight. It took a total of 2 days for the volatility to spike this much, but it was absolutely huge. When I talk about huge, okay, I'm talking about in terms of P&L. What you're looking at right now, and I know that this is small because I wanted to include everything in here, all right? This is a snapshot specifically, okay, of the dates, okay, surrounding the Chinese yuan devaluation in 2015. This is precisely a 24-hour period of time. It's from August 24th to August 25th, okay? On the right-hand side, this is my P&L. This particular event, okay, in using a number, okay, of strategies, and you can see a lot of the P&L in here came from one very specific area. It came from the SPX, right? There was over $10,000 of profitability in the SPX. What kind of strategy do you think I was using? Okay, that's just the SPX, but I'm showing you the entire account over here. The account was up, and right down there, it was $17,399.60. Okay, that was in a 24-hour period. Most of that which came from the SPX. We actually hit it out of the park using, all right, this particular strategy. Next up, this is the taper tantrum of 2016. Again, I wanted to give you a trip down memory lane. Every single time, okay, that volatility takes off, right, we used what we term crisis-seeking strategy. A crisis-seeking strategy seeks to go after, okay, a major move in volatility. Whether that volatility move happens, very, very quickly, or that volatility move happens, this one took about a month to unfold, right? And what you're looking at right here, when they call the taper tantrum, I just want you guys to see, this is also the spiders. Did you know the spiders, okay, they were trading right around 208. Did you realize they sold off all the way to 180? That's a big move. It's a $30 move basically in what? In less than a period of a month. Okay, in less than a period of a month. It's also one of the best months I've ever had, okay, in some of the recent history of trade. And I'm actually going to show you specifically the account. And again, this is a very small slice of time. And it's, here we go. That is from, January 1st, 2016 to February 29th, 2016. It's exactly a 2-month slice of time. There is the year-to-date P&L. And if you can't read this, I'll pop it up top over here. The same exact idea. It's 103,780.35. So it's just over $100,000 in P&L achieved inside of a 2-month window of time. And as you start to look down this, you're going to see a very, very similar aspects in terms of P&L. These are crisis-seeking type trades. A huge amount of the P&L came from the financials. A huge amount of the P&L actually came from futures and options on futures. Okay, specifically the Nasdaq, okay, and the S&Ps, and it goes on and on and on in this, in particularly this light. It's all about, okay, crisis-seeking trades. Next up on the docket, right after the taper tantrum of 2016, the Brexit. Okay, Brexit, once again, volatility spiked. This is a very brief period of time. Volatility spiked. How did we actually do in it? Okay, once again, I want to reiterate the exact time frame in here if you've never seen this before. This, again, what you're looking at in this case, this is an account statement, again, from Thinkorswim. I'll show you mine in just a moment. This is a 24-hour period. The P&L, it's right down on the very bottom of your screen, and it can barely fit in there, right? It was tough for me to actually get the screenshot and the full screenshot in there. It's 25,000 $201.13. It's the P&L for a 24-hour period of time. Again, we didn't think Brexit was going to happen. I took a shot. Okay, I used a crisis-seeking trade. The volatility exploded. It was over from there. All right, next, presidential election. Presidential election in 2016. I'll get even more specific with you. Okay, this is when I'm actually going to show you an individual type trade. Again, this is an individual type trade. This is the presidential elections of 2016. 2016 was a good year. For volatility, it was a really good year. And you start to look at this. These are the actual trade dates because I wanted to take you in. This wasn't like a whole myriad of trades that I had on for the presidential election. It was specific. Okay, this is a back ratio. I actually narrowed it down. Now, this ratio was actually done in the S&P futures. This is the S&P 500. It's the S&P 500. I put a back ratio on for a $2.65 credit. Okay, that was actually put on 11.8. I took it off on 11.9. Okay, for almost a $20 credit. Specifically, it was a $19.25 credit. That is hitting a grand slam home run on a trade. In addition to it, I had another contract of it. The other contract I put on for a 70-cent credit. I closed it for over a $30.75 credit. Okay, this is the first time during the presidential elections in 2016. This is the first time that I actually kind of coined the specific strategy name of infinity spread. Okay. Before that, I always called it like a crisis-seeking trade. I was always looking for big bursts of volatility when everybody isn't looking for volatility. This is the first time where I actually called it an infinity spread because I didn't know what was going to happen during the election. I don't think you did either. And I actually put on both a bullish and bearish trade and then let rip. And that's exactly what happened is the market ripped. Moving on. Here, we come into a volatility event. January and February 2018. This is actually a time that they called the VIXplosion. It's actually one of the fastest one-day moves ever recorded to the upside. The volatility was 12, pretty much where it is right now, prior to the single largest volatility percentage move ever recorded in history. Is that a good thing for volatility-seeking animals like me? Check this one out. Okay, this is once again, it is the infinity spread. And the infinity spread was done. And again, these are exact snapshots of trades. This infinity spread was actually initiated on January 17th. It was closed on February 9th. The trade was initially put on for a $1.37 debit. It was then turned around and closed for over a $10 credit. Timeout! People have no idea what that means. If you've never traded an option, you're like, what does that mean? Basically, I went out and I put $137 into the initial trade. Okay. Now, for those of you that are experienced, there might be some more risk in here. Don't worry, you can mitigate that risk. You don't have that kind of exposure. There's $137 of risk in this trade. Okay. What did it make? $1,058. That, people, that would only be on one contract. What if you do 10 contracts? 10 contracts, you have what? $1,370 in here to be able to make what? $10,000 and change. Okay? It's over $10,000 in P&L if I were to do 10 contracts. Never having more than about $1,300 of risk, though, on the table. And again, these last two events, these are the times where we actually coined the term infinity spread. Was the election of 2016. The next really big one, of course, was that January, February of 2018, the VIXplosion, where we actually used, once again, it's the exact same strategy. And I'm telling you again, we knew nothing coming into this event. I don't want to hear this crap. I knew. If you look at something interesting here, you'll look at January, February of 2018. And by the way, I don't mind bringing up my account. Okay, I don't mind showing you my account. And by the way, look, order history. Here, this is everything that I've done over the last 300 days. Okay, this is everything I've done in my IRA over the last 300 days. And I don't want to tell you that I'm a hyper crazed trader. I trade. Okay, I have 1,086 orders. I don't say that to intimidate you because I am going to tell you this. Okay, the most important thing that I do in this particular account. The most important thing I do in this particular account is going to be this trade right here. And I'm showing it to you again, right? right there. Okay, what am you looking at? Well, first of all, I've been filling them throughout the course of the day. It's part of the infinity spread. That's today's date. Okay, it's today's date. It's January 14th. It's customized spread. Why am I putting it on? I don't know. I'm putting it on just like I did back in 2018. Okay, you know the irony is when I look back at this trade, this one was done on January 14th of 2020. This one was actually done on January 17th of 2018. It's like the same time frame. And the market's doing kind of the same thing. It's rallying up into Never Never Land. Let's continue on from the January and February, okay, kind of VIXplosion. Here, this is Fed-fueled selling in late 2018. This is actually the market tanking right around Christmas time, okay, of 2018. Volatility was 11%. Look at this thing. Volatility just took off to the upside. Is it a good time? Yeah, I actually took advantage of it. Again, I'm showing you the specific trade. The infinity spread once again was used. Did I know anything? It's September. No. Okay. Then why did I take it off in October? By the way, I should have kept this trade on. I should have kept it on all the way to December. Yeah, but the trade ended in December. I didn't know. But I'll tell you what. For every $120 that I had invested, turned $659. Okay, that's for every $120 I invested, I turned it into $659. Again, you do not have to hit a lot of this strategy. You just have to hit, okay, 1 and 4, 1 and 6, right? You got to understand how big the infinity spread happens to be, right? Now, what I'm about to show you is not a popular topic, so bear with me. I have been using strategies, okay? Again, as I said, I only coined that term infinity spread around the presidential election. It's the first time that we ever actually said, this is the infinity spread. I have been using crisis-seeking trades for about a decade and a half. The single biggest trade that I've had on around this was in the financial crisis. Okay? That at that particular time frame, and by the way, there's a reason that I'm showing you right now. I am showing you trades, okay, from 2015 on. Everything that happened before that in my personal history, I don't show because I was a licensed broker dealer. I've actually had a Series 3, a Series 4, okay, my Series 7, okay, my Series, 66, and I also had a 24, and a partridge in a pear tree. You want fries with that, okay? Because I was licensed in the industry at the time, I do not display the trades specifically from that time frame. However, the single biggest trade I ever had is the financial crisis trade. And I used the proceeds to, I didn't know what to do at the time. I purchased a house about less than 18 months after the financial crisis. I actually purchased a house, and I actually left. I just realized I think I left the address up there. Sorry. I'm gonna have to blur that out at some point. I paid only 1.3 for the house. It's worth about 2.65 right now. It's the single biggest trade. It's probably not the most, people talk about the financial crisis. Nobody saw it coming. Please, okay? You saw a massive volatility event coming. Everybody, okay, in the financial industry saw it that was in the financial industry. It was just a matter of strategizing in and around it. And I feel really similarly today. It has nothing to do with this, okay? Nothing to do with the house and so forth. I feel very similarly today. And that could be both to the upside, okay, and or to the downside there. By the way, this is home. This is home here in Scottsdale. I'm gonna now show you specifically the infinity spread. Infinity spread, the opportunities, they are right now. All right, you have both a bullish case and a bearish case for these. Okay. One of the bullish cases that you could have, there could be a blow off top. Now, again, I want to bring up specifics. When I say a blow-off top, for those of you unaware what a blow-off top may be, the marketplace, maybe it's peaking out, maybe it's not. But if it flies, okay, it could fly all the way to like 360, then come back down. There could be a huge bullish case right now. The Fed, if the Fed feels the markets are going to slip a little bit, they're going to cut rates further. Okay, there could actually be a China recovery. The ECB could actually shift deeper into negative rates. The market will love it. The China trade war deal part 2. Who knows? The U.S. elections. By the way, you'll find this quite ironic. I have the U.S. elections listed both on the bullish case and the bearish case. You know, the bearish case, China growth stalls. Hey, listen, today, really negative news came out of China today on the exports. It was terrible. Good Brexit gone bad. Brexit is still in front of us, slowing global growth rates. It's still an absolute threat. The trade wars ignite in Europe. If you were unaware, okay, this just happened again today. The European Union is going to be discussing possible tariffs facing the U.S. And it just goes on and on and on, though, from this. Yield curve inversion returns with a vengeance, deflationary events with debt bubbles and student debt bubbles and, you know, car loans and the repo. It just goes on and on. Fed cutting some of their support. The Fed sooner or later may look at this and they go, we've done too much. We've gone too far. It's going to depend, okay, very definitively on what happens in the election. The stock buybacks. I mean, can you imagine if some of the stock buybacks are ended? I mean, who do you think's buying this marketplace? The market is buying itself right now. The opportunities, okay, are endless. And it's all about this infinity spread. Again, the infinity spread that I'm showing you right here. This is a simulated trade. I set it up as a simulated trade. Let me show you something else. Okay, here, all right, this is not a simulated trade. These things were executed today, and I have a multitude of the trade on specifically today. You can actually see I've been doing stuff in the SPX as well. I am setting up right now for volatility events. Now, I showed you trades from 2015, 2016, and a multitude of trades there. I showed you when I really started calling it the infinity spread, which is 2016 around the presidential election. Then, of course, 2018 during a number of major volatility events, okay, some during 2019. But now I want to get to the here and now. When I say the here and now, I'll show you trades, specifically infinity spread trades from just the last couple of months, because there have been some wonderful ones. Here, I'm going to show you, these are live infinity spread examples, okay? This is a TLT infinity put spread. Time out for a second. What is the TLT? For those of you that have absolutely no idea what the TLT is, let's bring it up. The TLT, it's the bonds, okay? The bonds are a-rockin', people. When the bonds are a-rockin', why not take advantage of it, okay? Right now, the bonds, this is a place to be too. Look. Could that thing be any tighter? This is a gigantic wedge that it is forming. All right, if you were into Bollinger Bands, it's as tight as, it's like this thing, people, they are ready to explode in the bonds. I took advantage of it, This is one of the fastest, profitable infinity spreads I have ever had on. I put it on, okay, in September, early September, September 3rd. Okay, that's just a 2019. Took it off 10 days later. The trade was done for a 12-cent debit. It turned into a $3.50 credit. Now, again, I know some of you don't know options. It's okay if you don't know options. For the most part, every $12, what did I have? Okay, I walked away with $350. That's if you wanted to do one contract. You could have done 120 to walk away with 3,500. You could have done what? 1,200 to walk away with 35,000. That's how big these trades are. There's a little bit of risk in here. Okay, and a little bit of margin held. But I'm telling you, we show you how to circumnavigate that. Is that one recent enough? If not, let me show you more recent. Okay? This is more recent. This is a SPY infinity call spread. This, okay, is a bullish trade. This was a trade that we put on, and people go, it's hard to make money to the upside. It's hard to make money unless, of course, you put a trade on. That was actually done for a 3-cent credit and turned around for a $3 profit. And again, the way that actually breaks down just blows people's minds. Put it on for a small credit. The credit amounts to $3. No, $3 if you did one contract, okay, to turn out to be $304. If you wanted to do 10 contracts, add a zero to it. So it would have cost you what? $30, but that's a $30 credit. You actually get $30 up front to be able to make, okay, $3,040. Those trades, they're right there. You can see the exact time and date. The reason I put up the time, the date, everything, these trades were actually done in front of TheoTrade clientele, okay? The aforementioned trades were done, right, in front of clientele. Notice the timing of the trade. The timing of the trade. You're like, why do you always trade in the morning? I trade in the morning because I'm actually live in front of, okay, a group of well over 1,000 people every single morning. Those are the trades, right? I did the exact same timing here in terms of the trades. Now, here's another one. Now, this next trade, this is a big one. This is a big one because it's an equity product, and I think you guys will all know and love it. It's Tesla, okay? It's Tesla. And in Tesla, I had a bunch of different trades on, but this is the infinity call spread portion of it. It's November 26, 2019. Right? We executed the trade in the exact same time frame in the morning. I put it on, okay, for a 20-cent debit. That means it would have cost you $20, okay, if you were to do it one contract worth. I exited the trade approximately 3 weeks later. And 3 weeks later, December 16th, I exited it for $11 credit. Now, an $11 credit, if it's a $20 debit, $11 credit is $1,100. That's for one contract. If you do 10 contracts is 200. 10 contracts over here is $11,000. I had a pretty good number of contracts on this particular trade. And I don't know, I bought myself a little bit of a Christmas present. The kid absolutely loves it. So that's mine. I just bought it. Okay. And I got to tell you, if you've never driven one of these cars, okay, and I'm only in probably about my 4th week of driving it. I bought it like 3 days before Christmas. But the Tesla Infinity proceeds purchased a Tesla. If you've never driven one of these cars, it'll hands down change the way you feel about every other car. I got rid of a bunch of other vehicles because it literally is that good. By the way, the car, it does not come with one of those in it. Okay? That one, you got to make it yourself. That kid looks a lot like me. It is kind of scary. By the way, we have a rule in the house. I'm not allowed to summons the car with children in it. Okay, that's basically driving it with autopilot. When I'm not in the car, you could actually drive the car with your phone. It's pretty amusing. But that's the Tesla Infinity proceeds. Purchased a Tesla. Looking at the strategy, it is very hands-off. And again, I want to go back to this particular trade. There wasn't a lot of execution risk in here. There wasn't a lot of knowledge base in here. Okay, this trade was really straightforward, and I like to pull up stuff, okay, before the fact and after the fact. I just showed you a trade a moment ago, okay? I don't know if this spider trade is going to be profitable. I don't know. And I paid $1.80 for this spider trade, okay? It's a similar, though, situation to what we're looking at here in terms of Tesla. I didn't know coming in here, other than Tesla had been rallying, okay? So if you look at the timing of the Tesla trade, I put it on an 1126. Okay, I put it on an 1126, and I just want to show you where is 1126. It's back here. Okay, did we know that the stock was about to explode higher? No, I just succumbed to the idea that it was probably going to hit, and I'll show you. Okay, my whole idea, I thought it was going to hit an all-time high, and I figured, what better strategy? Okay, if it hits an all-time high, maybe it continues to go. People start to panic. They get short squeezed. It'll be a party out there. Okay. Hence, okay, the Tesla spread. And that's the Tesla Infinity call spread. Listen, all of this is very hands-off. You know, if you're not sitting there all day long, it's fine. Okay? Every single trade that I showed today was displayed live at TheoTrade. The trade results we're showing, though, are perfect. Okay? And this strategy is perfect for part-timers. The Infinity spread is really, really hands-off. It's about as hands-off as you can possibly get. You can pretty much set it, forget it. You can use what they call good till canceled order types. I mean, we're talking, again, even a fraction of your time. By the way, I take my trades and hand them, okay, to all of our clientele. And we do that so that you have something to follow. Now, here's a couple of characteristics of the infinity spread. Okay? Increases in value when exposed to heavy volatility. Increase in value when the markets sell off or rally huge. Significant profit potential in a downside market move. Significant profit potential, obviously, in an upside market move. Loses minimal capital if the markets continue to drift or remain flat. Let's remember that. So what happens if nothing happens in the business? If nothing at all happens, okay, it's a wash. Who cares? You walk away with a small loss, move on to the next one, and move on to the next one again. Need only be placed, though, a few times a year. See, this is where everybody gets all caught up. They think to themselves, like, I don't know if I could. It's placed a few times a year. Do you not see the trade over here? It's done for April. That's what? It's 94 days out in time. Okay? Between now and 94 days, what do? I sit there and I go, I hope. What do you hope for? I don't know. If we have a blow off top, fantastic. The markets tank huge. All right, we'll be there. Okay? It's the perfect spread, though, to reduce risk of a stock portfolio, but it could be long or short. Let me give you a quick example, because there's something big that everybody's missing over here. You're like, I don't really need this. Really? Okay? Really? Because if you have right now a 401k, you got to remember, I ran education at TD Ameritrade, okay, from what? From 2009 when they acquired us. The deal was actually closed in late 2009. Basically 2010 to 2015, I ran education for them. Okay. I saw 7 million client accounts. You know what people did? They trade, and they have $20,000 in their trading account. And they're so infatuated with their $20,000 they completely and totally negate their 401k. You just don't negate your 401k. It's ridiculous. Okay. Your 401k, life savings. Some of you guys are going to have $100,000 in it. Some of you guys are going to have $700,000 in your 401k. You know that you can actually use this strategy to reduce risk. Because if the portfolio tanks, let me show you. Okay, here's the $700,000 portfolio. If the portfolio starts tanking in value, guess what? The infinity spread can offset the risk. The infinity spread can literally offset it. That's what a hedge is about. Okay, we teach you how to do this. That's how you got to reduce risk. It's also an excellent tool. If you just want to use this as a standalone strategy, you just want to say, that's it. You know, if you have a $10,000 account, you want to try to hit it big, do it. But don't put on one. Listen, we're not here to tell you to risk $10,000 in some infinity spread. I don't know when the next big move is going to come. I like saying that, okay? I'm telling you right now, the Fed doesn't know when the next big move is going to come. If they did, they wouldn't have screwed up as badly in September, like of course they did. Okay? This is what the strategy is designed for. Big moves. Now, building the infinity spread. First and foremost, don't you dare let options intimidate you. People get all intimidated by this. It's a ratio spread. It's a 1/2, and then there's a 1/3/1. Oh my, I don't know if I can. Listen, if I told you, okay, click here, believe me, okay, we have got clientele from, kids that can put this together all the way to, we've actually walked, 80-year-olds through specifically the infinity spread strategy, okay, and we did it on a multitude of different trading applications, okay? But I am going to tell you something. The spread below is being done, okay, for a total of $1.61 debit. This spread, okay, is like the mother of all spreads in here. It is going to be the fastest, okay, the quickest, okay, the most powerful way to get where you want to go in the marketplace. But if you don't use it correctly, you can lop off a couple of fingers, right? It's, again, the mother trade in the marketplace. The infinity spread is a beast in terms of how powerful it is. But I'm telling you, you got to build this right. You got to give us the time, okay, to explain the nuances behind this trade. This is what you need to successfully create infinite possible returns with minimal risk. This is what you need to learn to build an infinity spread. When and where do I place my infinity spread trades? Like today, I put on infinity spreads today. And we shot that out to clients, okay, far and wide. That trade that I showed you today went out to over 4,000 clients. Now, How often should I place these infinity positions? And do they need to be continually monitored? I'm going to tell you right now, first of all, they don't have to be continually monitored. Any event that's going to make an infinity spread like profitable, you're going to hear about it. It's going to be like headline news. They're like, China decided not to sign the agreement tomorrow. And you're like, okay, that's headline news. You know that that's probably going to be a profitable trade. Okay. But I'm telling you, you need to know exactly how to place these things. You need to know, okay, that they don't have to be continually monitored, but you have to know how to go about monitoring them. Okay. How do I set up the trades? And what's the correct market volatility to place these trades within? The market volatility is absolutely critical. Do it wrong, trade won't work. Do I need a large amount of capital in my account to do this? Absolutely not. $2,000 though is the minimum. I am going to be very clear about that. $2,000. You must have $2,000 in your account. That is not my rule. That is not the brokerage firm rule. That is actually a FINRA and SEC rule. In order to do these types of trades, you have to have a minimum of $2,000 in the account. Next, what underlying stocks or indices? What make the best candidates? So you saw a couple of different candidates that I used a moment ago. What candidates did I use? Well, the only trades that you saw one in the SPX, you saw one in the Spiders, you saw one in the TLT, you saw one, of course, in Tesla. Okay? I mean, again, those are some of the candidates. But again, don't narrow the scope. You don't have to narrow your scope, okay, to just that. And again, I want to make that clear. There's no need to just narrow your scope. Then you got to think about, how do I know when to get in and when to get out? What are the percentage returns supposed to be? Can I do this in an IRA or retirement account? Well, that last one I'm going to answer for you. I trade in my IRA now. I'm at the ripe old age of my mid-40s, okay? I don't necessarily need the monthly cash flow anymore. I haven't since 2007 when we took Thinkorswim public. So I trade a lot in my IRA, and that's for me. But I want you to know that you could do these trades inside of the IRA. Now, how do I size my trades for my account? Okay, if you have a $200,000 account and you're trying to use this to reduce a portfolio, like risk, how do you do that? Okay, how many contracts do I use? Do I do 1 by 3 by 1? Do I do 2 by 6 by 2? Like, whoa, I don't know. There's a ratio. Okay, what's the right amount of risk for me? If you have a $10,000 account, how many of these should you do? A $100,000 account, how many should you do? Okay, how do I build the infinity spread? Let me show you what we do here at TheoTrade. We create recipes in trading. That's what we do. I mean, TheoTrade creates recipes for trading. It's literally checklists. I mean, trading, it's all about answering the what ifs. What might be a good infinity spread candidate? What's the correct options expiration, cycle to trade? How much capital do I commit to these positions? When should I execute the trade? That means place the trade. What strike price options do I buy? Which ones do I sell? TheoTrade has your answers. We build recipes with definitive criteria. They're checklists for each strategy and each unique variable that you're going to encounter. What that basically means is this is like a pre-flight checklist. A pre-flight, like you're going through and you're like, step 1, what candidate? Step 2, what's the volatility? Step 3, okay, select the product. Step 4, how do I actually go about building the infinity spread? Like what do I sell? What do I buy? What's the right ratio? All of it. Okay. Then you got to talk about, forget about opening it. You want to really know the complex part of the infinity spread isn't opening it. It's knowing precisely when to close it. It's just a number, people. Okay. The complexity is taken out of it for you because we give you a variable. What if the market goes up? What if the market goes down? Anything that you can encounter, we've actually got it. It's an entire flow chart. If we go up, if we go down, I mean, what else can happen to you in the market? All right. Listen, TheoTrade is the answer to your questions. What's the right probability for my trade? How many option contracts do I trade for my account size? When do I close my infinity spread? What if the stock sails off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? We give you the how, the when, the why, at what price. It's just the beginning, though, of the many variables you're going to face while trading these infinity spreads. Now, I know some of you guys are a little bit more experienced, okay? And I also realized that you can go out there and you can Google. You can read all day long. There's probably 10,000 different sites that'll talk about what a spread is. You might even know how to build a ratio spread because this is a type of a ratio spread. But I'm going to tell you right now, you need TheoTrade's recipe for success to place these infinity spreads. Okay? We have 20 plus years trading experience. We had access to client order flow for 15 years. Okay? We viewed and studied over 7 million trading accounts and ran education for over 15 years at a firm with the single largest options order flow in the industry. People ask, where does a lot of the criteria from this stuff come? It comes from a whole lot of capital at risk. Okay, as you saw a moment ago, I had over 1,000 trades in the last 300 days. A lot of that, okay, is building criteria. But it also comes from the experience of having run education and looked at accounts for over 15 years. Believe me, you learn a lot from 7 million accounts. You learn to build criteria. And criteria is your recipe for success. The following strategy and its corresponding criteria requires the utmost attention to detail. I mean, we literally spent years fine-tuning this trade, the infinity spread, and all of its criteria. And when we approach the section on criteria, you have to follow the steps to build a trade. What our clientele are saying. This is the second time I've been with Don's service. It took a while to sink in, but in-out spreads are saving my beep right now and doing them everywhere when they fit. Okay. Also using the risk twist. By the way, the risk twist is another term from infinity spread trade on both of my accounts. It is embarrassing to think the tens of thousands I spent on option info and classes. Don's classes are the greatest. It's from Gary M. Here's another one. Don, I closed the TLT risk twist for 127% gain. Okay, price was moving around so much I ended up having to use a market order. Pretty excited to see what the whole RTS trade cycle and how well it worked. That's from Vicky W. Okay. By the way, that TLT spread, that was the one from September that I just had on. Listen, all of this leads to one thing. Okay. Maximum returns with infinity spread class. We have a class. It is available immediately for a price of $497. It's a 3-hour course. Okay. When I say it's available immediately, it's ready to go. The class slide deck that includes the entry and exit criteria, the checklist, is available immediately. This is a course that we pre-recorded. And we pre-record it so that we can go back, we can edit it, we can refine it. Okay. The course is archived for you. It is available 24/7 access. Or you can have download capability on TheoTrade mobile. We have our own mobile application for both iOS, Apple, and Android. Again, the cost of the course is $497, and it'll walk you through, people, every single nuance of the infinity spread is covered, okay, in this particular course, leaving absolutely nothing to question. It's $497, okay? We do have a bit of a deal for you this evening, okay, for those of you that are ready to enroll for this now. Listen, the Infinity Spread Workshop, here's the curriculum. Before I go through all the details, I want to show you, again, the curriculum for it. First thing, how to construct an infinity spread for maximum returns with minimal risk. How to build your own infinity spread in a stock, an index, an ETF with detailed step-by-step entry and exit criteria. How to build infinity spreads whether you're bullish, whether you're bearish, whether you're neutral. How to hedge your portfolio from market turmoil. Now, I stress that one. Not everybody is here tonight to learn how to hedge your portfolio. I stress that. These are volatility sensitive strategies, people. You got a 401k, you need to learn how to hedge it. But still, the infinity spread is there, okay, if you're just looking for explosive returns. We're going to show you when to open and when is the best time to close the infinity spreads, the tools and strategies for analyzing any market condition so you can trade with confidence each and every day, how to create trades based on movement in the market, volatility, not purely direction of the market, and how you can generate big returns in a smaller account or a retirement account with minimal risk. I mean, that's basically what the infinity spread is. We're going to show you what strikes, what expiration period, all give you the highest probability of success, and why infinity spreads are perfect as the absolute hands-off part-timer trade. Okay, trading, it doesn't have to mean that you're going to be glued to your screen all day. Now, I know everybody comes tonight and they saw the price and it's $4.97, but wait. Okay, listen. You want a bonus? TheoTrade, it's your bonus because we're going to go beyond one class or one indicator. I mean, listen, a lot of you guys, you've gone to every webcast, okay, known to people out there. I mean, you've looked at bouncing balls, red and green flashing hours. It gets ridiculous, right? Listen, you want everything to trade. You want everything to invest, and you want it at one place and at one price, and that's exactly what we do. We're going to give you a couple of bonuses this evening to go along with the Infinity Spread course. Bonus number 1. We're not just going to give you access to the Infinity Spread class. We're going to give you access to every class that we've ever done here at TheoTrade. It's access to over 87 trading classes. Let me just give you a brief synopsis. By the way, every class that I'm discussing right now, they're all available immediately, on demand, TheoTrade mobile application. Obviously, okay, one of the classes is going to be the maximum returns with Infinity Spread, okay? That's a $497 class. It's included. We're going to give you Guide to Small Account Growth. That's the in-out spread class. How to Collect Income Being Short. The next big short. That's a risk twist spread. Guide to Selling High Probability Spreads. Iron Condor class. Selling Premium, Minimizing Your Risk. Survive and Thrive in Volatility. Day Trading NASDAQ Futures. Covered Calls. Okay, Income Generation for Your Stocks. Essential Skills for Consistency in Trading. Top 10 growing skills for growing a small account. Pairs Trading. That's just skimming the surface. There's 87 total classes, all available right now. And we're continuing to add classes. Every single month, we're adding at least another class. Gives you access to over $9,000 plus in classes alone. I'm going to tell you, people go, I want a reason to do this. Want a reason? There it is. Okay. It's the full Monty, people. We don't hold anything back. We give you every single class that we've ever done. Okay. Right here, right now. That's the first bonus. By the way, the classes, 87 of them, it's not just me. TheoTrade is not like this one-trick pony. It's not Don Kaufman. TheoTrade is Jeff Bierman. He's the former chief market technician for TD Ameritrade. Those of you, hey, listen, if you've ever been on Thinkorswim charts, you owe a lot to Jeff Bierman because he built over half the studies in the Thinkorswim charts. Okay, nobody knows more about charting technology than Jeff Bierman. And we're happy to have him on staff. By the way, Jeff is also a professor, okay, at Loyola in Chicago. Part-times with us here at TheoTrade. Next, Matt Williamson, market-neutral premium selling option strategist. If you're an options super geek, this is your guy. Corey Rosenblum. He's our senior strategist. He's also our resident swing trader. Okay? Each and every instructor here at TheoTrade has their own genre, their own specialty. Brandon Chapman also worked, okay, with us at Thinkorswim and TD Ameritrade. He's our CMT, macroeconomics, technicals, and fundamentals. Then we have Steve Slim Miller. He's been 43-year veteran, stock options and futures trader, also former trader at Chicago Board Options, okay, for over 20 years. Last but not least, Tony Rago. It's our intraday NASDAQ futures specialist. Those are the instructors. We are now up to 7 full-time instructors, okay, here at TheoTrade. That's the first bonus, is 87 classes from these instructors and myself. Bonus number 2. We give you an all-access TheoTrade VIP membership pass. It's free. We are going to give you 3 months unlimited access to TheoStream. It's live trading chat room. We broadcast 6 hours a day. Now, I know not everybody can tune in all day, every day. You're like, I can't sit there throughout the course of the day. I get it. So what? Okay. All of it's archived. But our traders provide real trade ideas. Each and every day, we're broadcasting live, real trade ideas, insights, analysis. Okay. All of it. We email out the trade ideas, okay, including infinity spreads, in-out spreads. We have 5 distinct trading portfolios. We have daily coaching sessions with timely topics in stocks, options, and futures. You got to recognize, okay, people, you're going to go to other education. They're going to charge you what? $1,000 for this and $1,000 for this and $1,000 for this. Listen, okay, TheoTrade is everything you're ever going to need to trade. And on top of it, our instructors directly answer your trading questions via email. It's access to over $997, okay, of support, trade ideas, and insight. And again, I urge you, okay, after this evening, okay, you're in here, you can actually ask us questions in email. We return those emails, direct trading questions. I mean, you can say, hey, is this a good spread? We're going to say, no, that's the worst thing I have ever seen. Okay, this might be something better for you to do. That's your second bonus. Okay, with that comes access to 59 proprietary indicators and scans. We have the auto expected move, S&P 500 gravity points, TheoTrade, RSI, Laguerre. Again, people, they enroll for TheoTrade. Okay, and then they ask like, well, do I have to buy this and buy that? No, we include everything. We're going to give you every indicator that we've ever created here. Okay, Theo Quant Trade Setup, IV rank versus IV percentile, complex position tracker, the next generation squeeze indicator, SPX move. By the way, I'm actually going to give you the SPX expected move indicator, okay, in just a moment. It's access to $1,800 in indicators and scans. We just keep going. Listen, TheoTrade includes everything you need to invest in trade. We give you what? 87 classes. We give you access to coaches. We give you email access to all of our instructors. It's one-to-one email access. We give you a live trading room with live trades. There's no, we don't simulate trade, nothing like that. We execute trades in front of you. We have every indicator and scan you're ever going to need, and we give you mobile access. We have our own, mobile, platform. Hop on there. Check out everything. It's mobile access 24/7. Everything you need to succeed. I got one more kicker for you that we just added too. We do a weekly infinity spread video now. We just added this. It's me that does it. Every single week, we're going to update you on the infinity spread itself. Okay. When we update you, look, this is one that just happened. It's every Friday. Okay. When we update you, we're giving you trade ideas. The trade idea that I just mentioned a moment ago, in the spiders, that was actually coming from this particular video. I mean, what we've created here at TheoTrade, well, we built the Netflix for traders. Every genre of trade, anything you can ever think. I mean, you go on Netflix, you're like, this is blowing my mind. There's too much. Good. You know what? Because I'd rather have you overwhelmed rather than underwhelmed. We built the Netflix for traders. Tonight, total Theo, only $297. It will give you complete access for 3 months. It'll give you access to the maximum returns with infinity spread. So for $297 tonight, 3 months, you get the infinity spread course. You get access to 87 classes. You get new monthly classes. You get the live trading chat room. You get 6 hours a day. We're giving you real-time trade ideas. We're actually texting you trade ideas. We have push notification in our application. We give you indicators, proprietary indicators, right? We have email out the trade ideas in 5, distinct portfolios, daily coaching sessions with timely topics and stocks, options, and futures. Instructors directly answer your trading questions via email. Go now to theotrade.com/profit. This is the web address. By the way, everybody needs to go to this address. I'm going to tell you why here in a moment, because I'm going to show you when you go to theotrade.com/profit, you're going to find an important little link on that page here. But TheoTrade is also a completely riskless trade. Everything you need, to start trading from absolute novice to expert. And by the way, everybody and everything in between. When I say from novice to expert, if you've never had experience, you've never placed a single trade, you're fine. I'm going to show you why you're fine. I'm actually going to pop this up really quick. This is TheoTrade. This is our site. Here, you're actually in the Start Here menu. The Start Here, Options 101, Options 201, Options 301. These are independent videos to start to take you through some of the basics to ramp you up from the absolute novice, all the way to the expert. We'll give you a money-back guarantee tonight. Trade with us over the next 3 months. If you're not satisfied, email support@theotrade.com. Provide us the details of your trades and receive a full refund. If you're not satisfied, receive a full refund. Plain and simple. We just wanted to ice the cake. Listen, it's $297 for 3 months, and it's access to everything. And immediately the question, Okay. The question comes up like, is this a membership? It's not a membership. Calm down. It's $297. Okay. What do you do after 3 months? Is it an introductory price? No, it's not an introductory price. After 3 months, if you want to do it again, it's $297. Okay. We don't play around like that. We have over 4,000 members now on TheoTrade. Okay. 4,000 people are now on here. And what do? They pay, $297. If they want to do it again, they pay $297. It's up to you. But I'm going to tell you, okay, as I said, we're going to ice the cake. We make this a completely riskless trade tonight for you. We make it a riskless trade because we're so sure that you guys are going to love this, okay, that after 3 months, we hope that you're going to do it again and again after that. So what do? If you're not totally satisfied after 3 months, okay, email us. We'll just give you your $297 back. Come on, people, it's $297. That's not going to be any skin off of my back. By the way, there's some money back guarantee stipulations. The one thing I ask, you got to do 5 trades, okay, using any of the TheoTrade strategies and criteria in the next 3 months. It's 5 trades in 3 months. I've just done over 1,000 trades in the last 300 days. I think, by the way, all of those 1,000 trades are pretty much done in front of our clientele. Your initial account value must exceed $2,000. You must follow the TheoTrade criteria, okay? For infinity spreads, you got to follow our criteria for infinity spreads. And if you want to do some in-out spreads, you got to follow our criteria. And you have to provide real account statements of the trades. This ain't paper trading, people, okay? Those are my only stipulations because people are like, I paper traded and I'm not completely satisfied. Listen, I can't play games, okay? We don't have time. We don't have time to play games. After 3 months, if you don't love us, okay, just get your $297 back. Just show me 5 trades. That's it. That's all I'm asking. And those 5 trades have to follow our criteria. I'll make it as cut, clean, and dry as that. Get to TheoTrade now. Listen, we're going to work with you directly. There are only 30 spots on the TheoTrade riskless deal. Why do we do that? We have to evaluate trades, okay? We can't evaluate 500 different people's trades, after 3 months. You get 30 spots. That's it. That's 30 spots on the riskless trade deal. If you want the riskless deal, okay, go to theotrade.com/profit now. Just hop in there, okay? It's the first 30 people. It's a matter of trade size. We trade live. We also give you unlimited email mentoring. Send us all your trades. We'll give you definitive feedback. It's $297, okay? And the riskless offer, it's never been available before for infinity spreads. We've never done it for infinity spreads before, okay? Again, what our clients are saying, thank you, okay, for this VVS. Have lost money in the market, was pointed to you to learn about risk. You explain risk the way it should be taught. Keep teaching about risk. Set up the VVS spread in late September. Okay, October, market started downward trend. Fear did not exist. Was covered by your VVS, made $5,600. By the way, a VVS spread is what they call a VIX volatility spread. You know what that really breaks down to? It's the portion of the infinity spread. Okay, here's another one. This one's from a ways back, but I wanted to show it to you because it was a big one. And if you actually read the email, you kind of read it from the bottom up. All right. So for the most part, thank you, sir, for the suggestion back in mid-September. Really huge fan of the return the RTS. Okay, and of course, this is I had visions of sugar plums with a max profit potential of $26,000, but I'll take $14,000 with a few days prior to expiration. What this was in discussion, and I went back and forth, okay, is Gerald basically said, listen, I made 14 grand. I could have made as much as 26 grand. This was actually when the market was falling in December of 2018, and I turned around and I said, this is a huge return for a risk twist. And he said, yeah, thanks. You put it on. He put it on in mid-September. The irony of this trade, he did a lot better than I did in this one. Listen, this is everything that you get today with TheoTrade. Okay, access you get today for $297. All right, you get the maximum returns with Infinity Spread course. You get the free bonus. The first bonus, 3 months, all access VIP membership. Okay, you get, again, everything archived. We're in chat 6 hours a day. I'm going to show you that here momentarily. There's trading indicators and scans, daily coaching sessions. Okay, 10 hours of live support. You can email us at any time. And I always stress about the email because you know what? We have over 4,000 members and there's 7 full-time instructors. We can handle it. We can absolutely handle it. Bonus number 2, we give you access to 87 classes. There's day trading, swing trading, technical trading, beginners options trading, advanced options trading. There's a ton, and there's new monthly classes coming constantly. Here, go to this web address right now. I'm going to take you to it. Go to TheoTrade.com/profit. It's PROFIT. TheoTrade.com/profit. I'm going to take you to the site here for a brief moment because, as I said when I started tonight, that we're actually going to give you an indicator. If you go to this particular site, all right, to enroll now, just simply click Add to Cart. All right, when you click Add to Cart, it's actually going to take you to a separate link, all right, Infinity Trader. All right, here you go. Put in your information. This is billing information. Of course, right down here, okay, all your payment info, and you're ready to, of course, roll. It's $297. All terms and conditions are explained in here. Every detail, okay, of the course. All right. So, by the way, we're here to answer any questions in live support. Now, okay, on the bottom of this particular page, if you scroll down right here, this is the SPX expected move indicator for Thinkorswim. There's your download. Again, that is on the page, and I want to reiterate this. It's TheoTrade.com/profit. Now, I'm going to answer a bunch of questions right now because they're coming in fast at this point. Let me start with this. I have some general questions I'm going to answer for you, and then I'm actually going to show you a little bit about TheoTrade. So here, you know what? Let me do it this way. As you guys are actually going to that web address, and again, I'll throw the web address up there. It's TheoTrade.com/profit. This is TheoTrade. This is the chat room. This is where, again, okay, all of our clientele are discussing back and forth throughout the course of the day. There are well over a few thousand people in this chat room. Right here, this is where we actually broadcast when we are live. Okay, and we are live, roughly speaking, during market hours. I'll start tomorrow at 9:22 Eastern Standard Time. Next, here's just a glimpse of some of the TheoTrade classes. As I said, there's 87 classes, right? Classes are broken down to option strategies and option newbies, technical analysis, day trading classes, trend trading, hedging, futures, stocks, okay, pairs trading, mindset. We give you access to all of it. Watch as many as you want. Binge watch. That's why we call it the Netflix for traders. You want to see option strategies? Let's click on it. Let's click on option strategies. What have we done in here? The next big short, the risk twist, beginner's guide to ratio butterflies, okay? Strategy week. This is like every strategy, okay? Trading VIX options, the VIX volatility spread, how to collect income being short, selling options for a living, consistent small growth formula, the fruit fly for consistent income, duration iron condors. This is straddles class, okay? And again, guide to maximum edge trading earnings. These are huge. By the way, here's the class that you're actually purchasing. Maximum returns with infinity spreads. It's a very recent class. I edited it. It's perfect in here. In fact, when you click on that, I want to show you what a class looks like. You click on it right here. That's where you download everything. All right. That's where you download it. Click here, download the slide deck. Right. And it's broken into 3 parts. Then we have tons of Q&A. Okay. It's great. You're absolutely going to love it. There's the start here menu once again. So you click start here if you're brand new. This is the member home. Why do I take you to the member home? You can search our archive for anything you can dream of. Right. Anything you can think of. Implied volatility rank. You're like, I don't even know what that is. Good. Click on it. Okay. What's the worst that's going to happen? This is like the Google for trading, right? It's literally like the Google for trading. You can put in almost any term and it's going to give you, okay, King Dollar has unfinished business. Okay. You can put in pretty much anything you can dream of in our search functionality here. Okay. And it's going to have, I'm going to put in out because we do a lot about in out spreads. It's going to give you return after return after return, swing trades with in out spreads, the ins and outs of in out spreads 2018 edition. It goes on and on. Okay. Next over here, again, we're right back over to the page. This is maximum returns with infinity spread class. I just want to pop this in here once more. It's TheoTrade.com/profit. Everything, okay, that you receive is listed right down here. Everything from the 87 classes to the coaching, to the email support, to the fact that we're going to text out trades to you. Again, we even have, okay, this weekly video that's now on the infinity spread. Let me answer a couple of general questions, okay? General questions, and then we're going to come back and answer some really specific questions. Again, Go to that web address, TheoTrade.com/profit. It's $297 tonight, okay? And it's totally riskless trade. First question, people always say, like, well, what does it really take to get involved in the market? I just say, listen, you need a laptop, you need internet connection, because we have everything else. If you get absolute novice to the most extreme, we have everything else you're going to need. Number two, this question comes up incessantly. It drives me crazy. This is not a membership. We don't do that anymore. We used to. We used to do it. Okay, we don't do memberships anymore. Why? Some people get nervous. I don't want to pay $297 for the rest of my life. Okay, listen, you pay $297. Okay, you don't want to do it again? We'll never auto-renew. We'll never bill you again. It's $297 for 3 months. If you want to do it after the end of 3 months, do it again. Okay, if you don't, we get it. It's not an introductory price. It's $297. Okay, and we make it a riskless trade. Doesn't get much better than that. Number three, we are now providing Infinity Spread's weekly video update so you can follow all the moves in all the trades we make. Number four, TheoTrade archives everything. We understand that everybody can watch throughout the course of the live trading session. By the way, okay, you can watch all of this stuff on mobile and you can download it and you could watch it at 30,000 feet. But here's the cool part of mobile. You can also speed it up. You could watch it at 2 or 3 times the speed. So, you know, you're out there, you're caffeinated, you want to listen to something at twice the speed, you could do that. Okay, we actually have variable speeds. Number 6, you can email us anytime and receive a response within 24 hours, including trade-related questions. I don't care. You want to fire a trade to me? Fire a trade to me. What's it going to do? Okay? Again, it's no skin off my back. Like, it'll take me 5 minutes to respond to you and be like, you know what? I would rather do the trade this way or this way. We like to do that here. Guys, hey, you know, listen, these are trade ideas. Let's make sure you get them right. Your money's on the line. Okay? You'll gain access to every course TheoTrade has done in the previous 4 years. It includes classes and coaching. When I say everything we've ever done, you have access to. Everything's searchable. Name a trading topic, and we've got an archive on it. Number 8, all these trades can be done inside of an IRA retirement account with as little as $2,000 in the account. We at TheoTrade can help you get approved for options. Plain and simple. At several major brokers. If you got TD Ameritrade, if you're at E-Trade, if you're at Tastyworks, okay, you name a major broker, we've got a relationship. I spent 15 years, people, at Thinkorswim and TD Ameritrade. Okay, half of my friends now work at either TD Ameritrade, they work at E-Trade. Some of them now work at Charles Schwab. TD Ameritrade is about to be Charles Schwab. Okay, listen, it's not that big of a world. We got you taken care of it everywhere. You name it, we'll get you an account there. Number 10, okay, you better remember there are 30 riskless trade spots available. We do that simply for this reason. I have to review your trades. Okay, especially these infinity spreads. I can't review 4,000 people's infinity spreads. I can review 30, okay? And it's fair. It's 30 riskless spots. We will literally give you your $297 back if you are not satisfied after 3 months. But again, you got to do 5 trades. Just get results, take action, enroll for TheoTrade. There's absolutely no risk to you. And I'm telling you, you are going to love what we're doing here, okay? I mean, for $297, you guys are going to be absolutely blown away. TheoTrade.com/profit. Again, what our members are saying, one of my favorite lines over here. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. Listen, for $297, we don't go like, this is another 1,000 and this is another 1,000. We don't do that here, right? And it's important that you guys know that. Here, from TheoTrade chat room. It's so amazing, okay, what we learn when we listen. Thanks to my ex-wife for this quote. Don is a wonderful teacher. I've really enjoyed listening and learning from him, okay, the last few months. I love how Don goes about explaining and showing and going through the mechanics. King Cole 7, okay, TheoTrade.com/profit. Again, I'm actually going to pop open that webpage once again, and I'm actually going to answer some of your very specific questions. So hang with me as I do answer some of these questions here. Again, just click Add to Cart. For those of you who need the SPX indicator, it's on the bottom of this page. If you need to contact us, okay, number 1, we're here. Just come in here and chat now. Just put in your name and email address and you'll start talking to us directly. You could also email support@theotrade.com or give us a call. It's 800-256-8876. Once again, I just want to pop this up here. It's TheoTrade.com/profit. Now, let me get to some of the specific questions. So one of the first things that came in was more of a comment. TD won't allow me to do any spreads. Okay, Robert, we got you taken care of. We'll walk you through how, okay, to get those spreads taken care of. By the way, I like this one. Carl came in and said, what if you're Canadian? Okay. In Canada, the commissions are way more. I'll help you guys from Canada, okay, get the lowest possible commissions. I'll tell you exactly what brokerage firm to go to, where not to go to, and how to navigate or circumnavigate some of our fun Canadian restrictions there. So it is fine if you're a Canadian, you can absolutely do this. So Robert, we got you taken care of at TD Ameritrade. And you know what? If TD Ameritrade doesn't want to do business with you, we've got multiple other brokerage firms that will. Next one. Next one came up, says, does this work on any ticker? The answer is absolutely not. One of the things, the criteria for the infinity spreads class, what it does, is it's literally like I kind of think of like a sand sifter. You throw a big pile of dirt, and kind of shake it through, and you're only going to be left with a few underlyings that you can do this on. This is a highly sensitive trade, but we will pinpoint, precisely where it works, why it works, and how it will work, but it is a limited number of underlyings. All right, so, another question came in here. Robert was also asking, this might be another Robert, how does slippage affect risk or volatility in the price of options over time? Today, Robert, the slippage is not going to be an issue at all. Slippage is the difference between bid and offer, That and commissions. Commissions! What about commissions? Commissions are next to nothing. Commissions are next to nothing. I mean, certain firms are at nothing right now. They're at zero on commissions. Nevertheless, it has never been a better time, Robert, to be a retail trader. People talk about commission wars. Oh, it's the commission wars. Yeah, they're over. You won. You won. That's the whole goal of the commission war. You won. I love it. All right. By the way, John was just playing around with this, and he said, I tried to place this spread in Thinkorswim, and it wouldn't allow me to add the fifth leg. John, that's because you're never allowed to place more than 4 legs at any one time. A huge portion, of this infinity spread class is how to place the trade. Execution, it's everything. Placing this trade, is the criteria unto itself. There's literally in the criteria, there are 2 full steps in how to execute. When I say execute, that's how you actually place the trade. All right. Next one. Do you have these trades on all year? Or just when you see volatility? Peter was asking this. So Peter, here's the one thing about volatility. You never see it coming until it's too late. You never see it coming. So for the most part, do I want these trades on? Well, I want you to remember back. I don't want to give anything away over here, but I want you to remember back to what I was just talking about. I showed you trades from 2015 and 2016 and 2018. Did you notice something very interesting about my trades? I didn't miss anything. I didn't miss one single volatility related event. And I haven't missed one, in almost a decade. Why? Because I almost always have some type of volatility, and crisis seeking trade on. I'm always using, some type of an infinity spread. That's precisely what this course details, and it's important to me, right, that you know that. So I think that is a very, very pertinent question, I think that question is, people, that's the right one to ask, all right? Why do you take that risk? Why not take advantage of what the marketplace has to offer in terms of volatility? Because the marketplace, I'm telling you right now, the marketplace does a terrible job of pricing forward risk. All right, next one, do you put a sell order, after placing the trade? What's your exact, this is Carlos who was asking this, what's your target exit? Carlos, you're going to see the target exit in the class. I can't give that one away. That's part of the criteria, man. I just, I don't want to bait you there, Carlos, but I'm totally baiting you. Yeah, you can actually put in a good till cancel to close the order, but it's very dependent upon what product you trade and how much you actually pay for it. So I'm going to tell you right now, that's again, it's the right questions to ask. Between like Peter asking like, do I just put one of these on all the time? Why not? They're cheap trades. Okay, it's a cheap shot to hit a grand slam home run, and you're going to realize that you only have to hit one grand slam home run, okay, every like 18 months, and it's totally worthwhile. It's totally worthwhile to hit that grand slam home run, but you just got to sit there and you're like, it's not doing anything. Okay, so you put a little on here, a little on the TLT, maybe one on Tesla, one on the spiders. Before you know it, you're like, holy crap, it worked. Okay, you just saw this year, like what? This past year in 2019, it was just straight up. 2019 was straight up. Didn't matter. I still had 3 trades, okay, that went off and went off well. 3 trades. I had one in TLT, okay? Then I had one in the spiders. Then I had the Tesla trade. All 3 of them went off. That's 3 in a year. That's really good. And you're like, but what? You only have to have one go off a year, okay? I mean, you realize you could do one trade, okay, for $1,000. They could make $10, $20, $30,000 on a one lot. This is huge, okay? All right, a couple of people I want to thank as they're enrolling for the riskless deal. This is Craig C. from Oregon. That's Mark P. from Arizona, JG from Texas, Leo from Pennsylvania, Jason from Maryland, Richard from Florida, Edward M. from Florida, Joe S. from Arizona. Got a lot of Arizona people in here. I like it. There's also a lot of Floridians. It's Joe S. from Arizona, Joe P. from Florida, Michael G. from Florida, Robert L. from, again, Pennsylvania, Melvin F. from, looks like Alabama. Nice. Okay, we've actually got a couple of instructors, a couple of Alabama instructors here, including Matt and, of course, Corey Rosenboom, both originating from Alabama. That's Raymond from Alabama as well. Michael F. from Virginia. Stephen B. from Minnesota. Okay, and I don't want to butcher this name. Sanjog G. from California. Thank all of you guys. And by the way, everybody, as you start to enroll for the class, you should know tomorrow morning, come right into the chat room. And to help you navigate to that chat room, okay, as you log into TheoTrade for the first time, you'll come over here to member chat room. You'll click on member chat room. It'll load up. I will start broadcasting. The exact time is 9:22, okay, 9:22 Eastern Standard Time. Hop in here and say, hey, okay, I'm brand new, okay. Gabriel P. from Iowa. Thank all of you for hopping in here. By the way, as you actually get your username and password tonight, you could come over here tonight and, I say jump into the archives, but I kind of suggest everybody, okay, no matter what your level of experience, maybe start in the Start Here menu. Even if you know options. Again, even if you know options, right? Come over here to at least options 301, okay? What to expect in the markets using expected move. I'm telling you, this stuff is invaluable to you. Order execution alone. This is a 3-part series, okay? That's going to save you more than $297, okay? Just watching that one course will save you more than $297. It teaches you, okay, how your order is routed in this business. So with that, I hope I answered each and every one of your questions. I know that there's a ton coming in here. I'm actually going to sit here and I'm actually going to type a couple more answers to the questions. It's theotrade.com/profit. Again, I want to thank everybody that joined us tonight. I hope to see each and every one of you inside of our chat room, and please enjoy, okay, the maximum returns with an Infinity Spreads Trades class. Email us anytime. Thanks, everybody. Have a wonderful night. Bye-bye.